See if this works. Check 1, 2. Holy shit! People are jumping in. Good morning. I'm fucking some shit up already here. Let's fucking go. Can you guys hear me? Right on, right on, right on. All right, we'll turn this shit off and just get right into it. All right. It's gonna be just a little bit scaled back here today. We're a little bit late too. It's already 8:10 in the morning. I hope this works. I just sat here and I actually just had to work on my microphone for the past 10 minutes, half an hour, 20 minutes. Good to see everybody this morning. I posted this one publicly on Twitter instead of just on iCaptain's Alpha. I haven't been on in about a week. Well, I think it's 5 trading days, and then yesterday, and then the last Friday. Good to see everybody. Good morning. Good morning, Gerald. Good morning, Steven. Good morning, Chaz, M.A., Young Trader, Binky, Gerald, Ed, Young Trader, Josh, my brother. Good to see you. H.P. Kubrick, Kajan, Faison, Troy, Not a Suit, Matt, Steven, Gary, Gerald. Who else is in here? Danielle, Patrick, Blind, Nestal. Good to see you. Troy. We'll get into a bunch of shit later. We're going to talk about a few things for CPI coming out at 8:30. So we're going to switch it right over. We're going to get into the 8:30 hour, of course. So we're going to turn this down here. We're going to switch right over to what we're doing. So we only have 19 minutes until CPI numbers come out. This morning I was watching. We'll get into like the where have I been and all that kind of stuff after the decision at 8:30. We'll talk about that kind of stuff. Tell me if you guys can hear any kind of a hissing in the background. On my end, I can hear hissing. If you can hear hissing, let me know. Julian, Billy, Elram, good to see you. Garrett, good to see you. Ryan, Tomas, Paul, Choi, brother, good to see you too. Dianon, everybody's showing up. This is good to see people this morning. Mike got way louder. Okay, I'm gonna turn that down right now. You know what I think is that I think that my I needed to reboot Streamlabs OBS to kick in the mic. Yeah, to kick in my mic mixer. So whatever, I don't care. We'll just let it slide for today because it's already so fucked up as it is. They got a new setup. I'm on my third graphics card right now. So hopefully you can at least see me. Hopefully my camera doesn't go away today. I had some freezing. You guys remember the last time I was on, my stream was freezing up. So I'm about having some issues, but whatever. I think I've solved it at this point. Had to rebuild the new computer and all that kind of shit. Now this morning, let's get started right away, okay? Let's just talk about, we have CPI this morning. We've got the monthly over here, 1.1%. This is the estimate, right? Previously, it was 0.8%. You guys know most of this stuff, right? Core CPI, 0.5. CPI year over year, 8.4, right? That's the expectation. Now, there's a couple things going on. We're going to talk about some macro stuff later. We're going to talk about CPI real quick, but we're going to talk about some macro stuff this morning. Specifically what it means with CPI too. So there's two things in play right now, right? We've got the market that's been selling off, and the one key thing about let me see if I can get hold on here. One key thing about the market selling off is it's twofold, right? they're going to use headline news saying that the market's selling off due to the CPI anticipation. CNBC was saying that early this morning. Everybody's scared about CPI. And in reality, the market was kind of overbought. I mean, that's the facts. The market was overbought. And we'll take a look at that right now. I'm going to load that up on another screen here just to show you that the market was overbought. And there's no reason, there's no real reason why the market shouldn't be selling off. And we're going to talk about some macro stuff today. We're going to talk about how bad can the market get if you have a negative viewpoint or a sideways viewpoint. We're going to talk about all that stuff this morning, even after CPI comes out this morning. We're going to talk about where you should be buying, where you should be selling. We're going to talk about value stocks versus why you should actually be buying tech stock. I'm going to explain all that to you because we've talked about this in the past and how long you hold this stuff and how the price doesn't actually matter. The percentages matter, right? The money that's in the market when the money's taken out of the market, when the price winds up, really doesn't fucking matter. Didn't matter in fucking 2020 in March. It doesn't matter for the past fucking 3 decades. You can just look back on history and know when to buy and sell. And we already know that there's a general idea of where the market's going to be this year. And they get that right usually. CNBC gets that right. Social media gets that right. But there are places you should be buying. There's places you should be taking profit. There's places that you should know where you should be taking profit and then jump back in if we actually become bullish on the market. So we're going to talk about that this morning. And we're going to talk about why CPI to an extent doesn't matter. The only other thing I had to say about CPI this morning is that you have this big buildup to it. And whether we sell off today or not, we're going to eventually sell off. I'll show you that even if it's good today, we bounce up higher. That will still sell off. It doesn't matter if it's today, tomorrow, next week. There'll be a sell-off. And because it's what normally happens in our market. Now, where the price winds up can change each time. But this is a pretty regular thing that happens. And this is when you should be buying and selling is following these indicators, right? And it's something I try to press upon you guys out there. So you can kind of like push away all the news that's out there. Push away all the noise that you see in the market and know when to buy and sell. We're going to talk about how that impacts the next year in the market and whether we go down in the ball of flames, we go sideways, or if eventually we just go straight to the moon, right? It doesn't really matter. Now, so for this morning, we should have sold off. And this whole past week, we should have been selling off. And I'll show you why. We'll take a look at it here this morning. But I'm going to go through some things with you, okay? Let's go through a SpotGam report. I like their daily notes, pretty cool, pretty good. Futures are holding yesterday's close, currently near 44.05. This is the off of overnight lows of 43.82 and the highs of 44.112 or 12. This move obviously foists a larger negative gamma position on markets, which expands our SPX volatility estimate to 1.27%. Pretty big. Note that negative gamma is SPY and QQQ is quite large, which signals a more elevated volatility. Initial support is at 4,400 and then 43.10. Resistance shows at 44.20, which is right above, right? So we're in a squeeze type situation. We're either going to sell off hard or we're going to squeeze higher. And we're going to talk about what I talked about yesterday. We should get a squeeze today. My viewpoint is that we're going up. And then we're going to bounce back and head back down just like we did in December. Now, initial support is at 4,400, then 43.10. Resistance shows 44.20, and then 44.50. Traders will be watching the 8:30 CPI print. Yesterday's price action finally seemed to trigger put buyers. This is mainly into the close, as our Hero Delta readings were positive to neutral into 2 p.m. Eastern Standard Time. Shown below is the change in SPX put open interest. And you can see that there were several out-of-the-money puts picking up greater than 10,000 contracts. We'd also know that 30,000 calls added to the 44.50 line, likely placing that strike in play on any rebound. So basically, they were playing strangles, right? Take a strangle on Friday, take another strangle yesterday into the close. Matter of fact, it's a great the close yesterday would be a perfect place to take a strangle. In regards to puts, you can see that the overall put position is now driving larger in size. Below is our delta tilt reading, which we found effective for reading the lower bounds of markets. You can see that there was a bounce coinciding with the March 22 lows. And now we are reapproaching that lower bound level. What equally interesting here is that the rise in this indicator was due to the closing of put positions with March OPEX, not the addition of calls. Okay. Now, I think I posted on Twitter this week that you'll see 4,000. I think you will. I don't think it's out of the realm of possibility to see 4,000. We might not. It's possible we don't. We have the market breadth indicator that'll tell us if we're gonna or not. It really doesn't matter where we bottom out. It doesn't matter if we bottom out at 430, 420, 410, fucking 400, 4,000 or whatever. It doesn't matter. Material call buying has failed to manifest throughout the year. We already know that, right? We've already talked about that, right? We know that people stop buying calls once you start getting higher. We hit 450, 460, anywhere near there. We're like, fuck this, I'm out of here. I'm taking my gains, and I wait for the next drop for me to go long again until I see something higher that the banks do. Material call buying has failed to manifest throughout the year. This is the market being driven by the flow of put options, entirely different from the call-heavy trading of the past 2 years. We already know that. We've known that since November, right? Put-controlled markets are characterized by high volatility, as dealers must hedge in the market's prevailing direction. Put flow is likely to remain higher than that of calls until the macro landscape is clear. This is a key point right here, because this really does involve the markets. I fucking hate CNBC, I hate Twitter and fucking Reddit and all that shit, stock twits, but there is a general feeling in the market that is truthful, right? You know, the last couple of years that the market was going up, generally speaking. You know that there's a neutral trade to slightly down trade at minimum in the market for at least, let's call it the first three quarters of the year, right? You could say it's sideways. You can say whatever it is. And we're down below all-time highs. We're not getting near it right now. So we know that. But you understand that. We know that, right? This is going to lead us into a conversation later this morning. Our purpose here is to monitor the options market and volatility. Last week we discussed why we're concerned about the move in credit markets. And as you can see here, the MOVE Index, aka Bond VIX, continues to press near March 20 highs. The VIX remains well below 22 highs. We'll talk about that some. I haven't talked much about that this on Twitter. And we'll talk about that at some point today as well, if any of you don't know what that means. There's now been a 15% drawdown in Treasury futures, something that has happened only twice before since 1990. We think that this likely pressures the estimated greater than $500 billion in risk parity vol trading strategies. This is interesting, too, because we'll look at a story that was written last week that was commented upon where some banks are stuck in buying vol, too. It hasn't been talked about in the news much, and no one's commenting on it. No one's talking about it. We'll talk about that later. Something that no one has on Twitter that I've seen. These are complicated waters to navigate, and as such, we're thankfully rely on model-driven forecasts. It's ultimately about flows and not narratives. And as such, was just that until the market recovers, the vol trigger 44.75, right? You know about that, right? Volatility trigger, negative volatility, positive, or no, not the vol. That volatility trigger is negative gamma, positive gamma. Let's say it differently. It really isn't really positive and negative either. Then put flows and high volatility will continue to dominate. That's basically saying if we stay below 44.75, expect volatility. Expect wild swings in the market. Expect to sell every rip. Even if we're heading higher towards it, be expecting to sell those rips until we get above 44.75. And then when we start heading up there, you wouldn't expect to sell rips. You'd be looking to buy dips. Okay? So I'll scroll through this right here for you right now. And I've been posting this chart for the past week, I think, or at least since I stopped live streaming. So I'm going to show you. This is that chart, I guess, for today. Okay, and we started rolling back here on 329, and I'm going to show you another chart real quick here. I'll bring this one up here. We got 8 minutes left, and I just want to show you this real quick here. Think of all this nonsense that I put in over here. But I do want you to see this here, because this is the 29th of March. This is the market breadth indicator, okay? You can see this over here. See, it coincides perfectly, right? You can see we came up into the sell zone above here, right? This is just normal, right? Take profit, take money off the table, watch it roll over. Happens all the time is my point, okay? We're starting to get lower down here. So if I were to put like we're starting to get really negative, actually, which is good. This number over here, 601.3, you can see 46.8, right? The market should continue to roll over here. We can have a little snap up today. That's not out of the realm of possibility that shorts cover. We go higher, and then we continue to sell down until we get to one of these buy triggers down here, right? This happens frequently, right? Happens all the time. Happens here, happens here, happens over here and here, happens over here, here. Notice that the market can go up while we hit those capitulation, those market liquidation moments. Notice that we can go down, hit those market liquidation moments. Even notice back here in March, right? Believe it or not, here in March, we had one right here, right down here, and we actually went back up to this point right here again, right? We had another liquidation moment, right? And we went back up again. So it's not like this doesn't happen. It's common. We'll know previously, right, where they are, where the sells and the buys are. We know when it starts to get risky is up here, right? We know that we don't need to capture the entire buy, right? So we already know that stuff. We already know that we should have expected some sort of market rollover. We're going to talk about the difference, too, in like value stocks and S&P 500 and why is tech selling off so much and how it doesn't really fucking matter later on this morning. But so we're looking for this, right? Capitulation move at some point. Even if we squeeze higher today, we're going to still look for market liquidation because it happens, okay? It just happens. So we're going to get rid of this one and go back to this chart right here. And I want you guys, if you guys don't have this on your charting at home, here is your support 2 down here, 431, right? This is the JPM collar over here at 434, right? S1, support 1 is 440, and then R1 up here is at 442, and then 445 is R2, resistance, right? And that's kind of the point, right? The point is that I was saying yesterday, I was saying, look back in December, right? We had something like this happen, I think, and then it snapped even higher, and then we shot down and got that capitulation move. And it gives bears a chance to get better positioning. You might get one today, and you might get another one tomorrow or Thursday or Friday, or not Friday. We're closed on Friday for Easter. But, somewhere in here is where I'm actually looking to take my next short. Now, do I think this is guaranteed? No. But do I think that, we've fucking come down so far in anticipation of the CPI print that it really better be fucking bad. It better be like fucking 10, 12, 14 for us to start selling down. And why do you care even if we do begin to sell down? Because in reality, you're just looking for that place to buy that dip down here, okay? You're looking for that next dip to buy when we're in oversold condition so you can take it long. Okay, that's really what you're looking for. Look at that. It looks like cock and balls already. I'm already starting with the cock and the balls and the first thing in the morning here. Look at that. Bam, cock and balls. I shouldn't have done that. But this is what your setup is for today. And this is what I think is going to happen. I think that you're going to get a panic rip higher. I think even if the CPI print is, we'll talk about CPI later and inflation later because I'm dealing with it right now. I just bought a house and I'm dealing with it. It's 8:26. I'll turn on Trade the News real quick, and so I think we'll get the CPI print before Twitter does. Matter of fact, I know we do, or most of the time we get.
You're listening to Trade the News.
I'll turn this on. Let me make sure. Tell me if you guys can hear this out there. I'm going to do a test.
Are working properly, and you are now ready to listen to our other voice channels.
So let me
if the audio is not broadcast quality, is not clear, or is choppy, please read over our support page at www.tradethenews.com/help. For a list of common sound.
Yeah, I'm not hearing it either.
About 2.5 minutes to the
That's
CPI data for
I'm already having
March.
problems there.
CPI year per year has seen 8.4%. Expected rise from 7.9%.
So what I'll do is, I'll turn it on somewhere else here,
6.6%.
and I'll listen to it.
6.4% prior.
Give me just a second here. I'm going to bring it on somewhere else and listen to it in the background, and I'll read it to you. Listen, I'll say it to you guys. Oh, you know what I could do here? Give me just a second. Hold on one second here. Desktop audio. Trade the news. We got 3 minutes left. Trade the News.
You're listening to Trade the News.
I think I can do this. Desktop audio. Microphone. Desktop audio. Properties. Monitor and output. That might work. Let me see. See if this works. See if we can hear it.
You're listening to Trade the News.
All right, so fuck that. What we're gonna do is we're gonna see if I can turn that up. I don't know why I'm not getting the audio. Desktop audio is not flying for me. I had to redo this whole entire thing. So I'm gonna turn it on over here. and I'll listen to it in the background. And if I whatever I hear, no, my. Okay, so I've got it on the background over here. We've got 2 minutes left until CPI print comes out. The moment that it comes out, I'll say it to you guys. If you are first time joining us, if there's any kind of a delay in your stream, go down to the little icon down below and you can speed up the stream. So if you're tuning in for the first time and you want the live stream to be, within a few seconds, just speed up the live stream right now, and the little hamburger or little box on YouTube, you can speed it up and it'll eventually go to real time. YouTube slows down live streams, but you can actually catch right up to it. It's like a 2-second delay, 5-second delay, and you'll have this quicker than. Let me close that over there. You'll have this faster than. Isn't that beautiful? Look at that, gorgeous. Can I bring that right over there? Just a few seconds for CPI data. Should I go to the 1 minute? We'll get all crazy with it. Oh yeah, look at that, the 1 minute. Oh baby. 8.5% for CPI or CPI. Inline. Lower than expected. Holy shit, baby. Woo! Inline and lower than expected. Bears are fucked. Oh, wait a minute. Wait a minute. Hold on a second here. March CPI 1.2% versus 1.2% expected. Year over year 8.5% versus 8.4% expected. CPI excluding food and energy month over month 0.3% versus 0.5%. Year over year 6.5% versus 6.6%. CPI index NSA 287.5 versus 287.4 expected. CPI core index SA number versus 289.2E. So that's actually not bad. That isn't way in line. Way in line. Winky, I didn't see you in here, brother. Good to see you, my man. Good morning, Winky. Yeah, so is that a bad CPI number? Noticeable downtick in sales of cars, or in car pricing. Used car pricing is going down. That's a note along with CPI data. Noticeable downtick, which is positive for inflation going down. Don't forget, we also have Biden speaking today. I think it's at 2:30 this afternoon, talking about price controls of some kind. So CPI, right? Not bad. Bad, but not bad. Could be worse. Sarah, let me give me a second here. So CPI data in line and slightly better. When it's going to come off in, it's bad, of course, but that inflation is actually coming down in some pockets of the United States, that we're seeing inflate. And this is an interesting one too, because I wanted to talk about we're going to do a macro talk today about the oil trade that everyone's talking about may not be there if GDP is going to come down. We're not in the same situation as we have been. Like, all the pieces to the puzzle to a recession are not exactly where they're not all in place because of how abnormal 2020 was, March 2020, and what happened. So we are trading higher. We're now trading at 443.05, just slightly higher than the close yesterday of 439.87. We know that resistance above is at 444.86. We'll see if shorts begin to close at some point, or if we come back down over here. Maybe shorts try to unfuck themselves if they can this morning, so that we can trade higher. How high do we trade here? What's the top here today, right? And this kind of looks right, 445. We could possibly squeeze higher today to this upper bound of 450. We could squeeze higher, and then I would still expect some sort of a rollover at some point, or a trade sideways into of course the earnings season that's going to begin. But surely this morning, anyone out there that is, that's right, inflate my QQQ and TLT calls. Euro Boomer, good to see you. How is TLT doing right now at this moment? I think I was talking about TLT all week long. I've been talking to the TLT. Oh yeah. Oh baby, look at that TLT with that turn, baby. Look at that TLT turn. Look at that little TLT bump over there. TLT Bulls. TLT Bulls. We have a bunch to talk about this morning. As a matter of fact, I'm gonna turn on the give me just a moment here, because I'm gonna turn on what's that thing called? I got my computer here so I can turn on what the fuck am I doing here? I'm going to put on Discord so I can get flow into Discord today. I haven't been here. I bought a house and immediately logged into Discord. So I bought a house and I had priced the house out. I'd priced the house out to rehab it. It's part of my retirement, right? I want to keep this home and use it for money. Hold on here. Give me just a second. And originally I'd priced out, I think my original estimate was like $50,000 for a rehab. And that was me doing the rehab. Personalize your server settings. What am I doing wrong here? And I am now, then I thought it was at $70,000 or $80,000. I'm closer to 100. We'll talk about that later. We'll do a macro discussion. And what's crazy is that okay, so I'm in there, and I'm gonna do a screener. I'm gonna use that screener, 1080p. Okay. Looks like Discord is not taking input for your mic. Let's fix that. Okay, my microphone. Microphone privacy settings. Hello, apps. Okay, let's see if that works. Maybe you can hear my mic now. Okay. Anyways, it's kind of weird because how this impacts, you know, when you guys actually see the economy go down, it's you always think it's going to be the janitor that gets fired, and it's not. It's always the highest priced employees that get fired or downsized. And so that's what I've had to do. I've had to anything that's skilled labor I've had to take on myself, from GCing the project to I just did a bunch of electrical work. First I put a box in, now I'm running electric through the house, and then I'm doing all this plumbing stuff and running a roofing crew and all this other nonsense, which I didn't anticipate doing, but I'm doing it because it's going to put me behind like $30,000 to $40,000, and I'm so cheap right now. So I'm taking on this work right now that I didn't want to do. Got a little bit of a selling down a little bit of a bump up here, 443.45. Not too bad. We'll see how the open goes. Let me know in the comments real quick. Oh, and Joe Harper. I apologize for not calling you yesterday, Joe Harper. I can't find my fucking phone. Hold on one second, though. Hold on, I got something. Hold on 1 second. I got some. Hold on 1 second here. Because I haven't opened it, but it's here. Hold on one second. All right. Joey Harper, you in here? Yeah, I hired contractors. I hired subs. So I've flipped houses. So I'm like, I'm not evil. We've had this conversation before. But this is a house that I'm keeping. The GC I didn't hire. I've hired subs, but I'm doing like the majority of it, the difficult stuff or the running of it right now, because it's just not my budget. It's just not. Well, it is in the budget. I could pay the money to have it done, but the my ROI on it, if we go into a recession the next couple of years, I could get stuck. So hold on. So let's go back here. Can I? Let's just delete that. How do I delete that webcam frame? Oh, yeah, baby. What do we got here? Is that you, Joe? Joe Harper sent me something in the mail. This is from an old sailboat from, I believe, South America. Now, I haven't read the note yet either, Joe. But Joe Harper, what he does is he's got a shop at his house, and he took a piece of timber from a sailing vessel. We'll call it a sailing vessel. I don't know if it was a fishing vessel or a sailing vessel, and he turned it, I believe, on a lathe I don't know what he did with this, but let me see if I can put it to the camera so you can see it. Oh, yeah, look at that. It's got a little magnet on the back here. Beautiful, beautiful desk pen. So, nice little box. And I haven't read the note yet. So I'm not going to read that publicly, but I'll keep this for later. And I haven't used the pen yet either. But this is staying on the desk. And I'm going to give you a call later today. I tried to seek out the phone, and I couldn't find it. So I've got it right here, Joe. Thank you very much, my brother.
Russia's been saying that the Russian finance system is operating well.
So I think I have to work this into a pen holder of some kind, this piece of wood. So I'm a little beside myself over this. From a shipwreck in Costa Rica, baby.
Prime Minister Johnson and Finance Minister Sunak will be subject to fines for lockdown.
Yeah, I apologize for the microphone this morning. It's all fucked up. Now let's talk about some. So here we go. We're going up, right? Did you guys close your puts at close yesterday and open your calls? Did you guys do that yesterday? Did you guys follow along with that trade yesterday? Isn't that beautiful? Pretty rad. All right, hold on. Let's go back down over here. Make me small again. Okay, so we are trading higher at this point. We're going to talk about some stuff there. We're going to talk about some macro stuff. And we got a bunch to talk about. So first of all, so it's only 8:42. You can tune out if you want now. We're going to talk about the channel, and then we're going to talk about some macro stuff I need you guys to see. And yeah, hold on. I'm gonna try to put first. Let me see if I can put trade the news back on over here, and see if you guys can hear it at least. I'm kind of pissed off that you can't hear. Trade the news. Let me know if you can hear it or not.
quality adjustments. You may reach our
Can you guys hear
support desk
anything out
24
there?
hours a day
Good morning,
at
Ben. Good to see you.
support@tradethenews.com. This is a 24-hour
Let me know
live
if you can hear
broadcast
that
test
right
channel
now.
from the Trade the News broadcast network. If you are hearing this message, your sound
'Cause
card
I
and
can't
network
fucking hear it.
configuration are working properly,
And
and
I
you are
don't
now
know
ready
why I
to
can't
listen
hear
to
it.
our other voice channels. If the audio is not broadcast quality,
I think you
is
guys
not
can
clear,
hear it.
or is choppy, please read over our support page at www.tradethenews.com/.
Let me know if you can hear. Let me know if you can hear the Trade the News in the background. Because you know what, I can't hear it. I don't know why that is. Down mix, monitor and output, monitor mute, monitor off, monitor mute output, monitor and output. No idea. For some reason I can't hear it. You can hear the woman speaking? Okay. Yeah, good. I missed all of you.
As a reminder, we could see the
Okay, so
OPEC
I can't
monthly
hear it, but
oil
you guys
report
can.
anytime.
So I'm gonna miss. I'm gonna end up
2022
missing this
global oil
today.
demand
I don't know why I can't
currently
hear it.
stands at 4.2 million barrels per day.
I don't know if I can. Let's see if I can. Yeah, for some weird reason, I can't hear Trade the News.
OPEC oil, they cut their
Really bizarre.
2022
Okay.
global oil demand by
So at least you guys get
410,000
Trade the
barrels
News
per day,
today.
so cutting 2022
So
oil demand.
well, first of all, I'm having issues with. Oh shit! Hold on one second here. I'm about to run out of. I decided to plug in a laptop this morning. So
OPEC
I'm having issues on my end with hardware, and I was having issues with my streams.
China for
so I'm now
demand
onto
downgrade.
a new graphics card. Lots of frustration, and then I went through, and I think I've gone through OBS 5 or 6 times.
Putin saying
and
that if our
I
partners
added,
worsen
or
the situation,
I eventually
they will
found
feel
out that
the consequences themselves.
I had my camera setting to a large format. Can you possibly get that charger that's
Putin saying the Russian economy will adapt to the situation
and plug in this
saying the
laptop?
best solution for the economy is to cut bureaucracy.
So I'm putting out this large format video of just my face, right, to my desktop, and it's crashing the computer, and I didn't know what it was. That I thought it was all the other things I'm working on. So I'm having all this frustration trying to get ready, get on stream every morning. It's just frustrating, and I don't think that's plugged in if it's not showing that it's plugged in. So I have to. Anyways, it's a lot of work to get the production side of this out, and I'm like frustrated. So inside of that frustration, I have some other stuff that I'm doing on the side. Of course, that's absorbing my time, and so it's just been very frustrating to have all this going on at the same time. Plus, I got a wife, I've got children, and all that other stuff that's going on. So that's put all that aside for right now. I'm going to try to get here with you every day. I did want to tell you, though, that the house that I bought, I am building a studio in the basement right there, or like a temporary studio, so that I can live stream from there every day. So I have to be there every day, and you guys, I'll be able to be there and take breaks and talk to the guys that are working, so that I can be on live stream day in, day out. So the crazy part is I'm working on a room in the basement, so it has to look like a studio. It can't look like it's like the back room in this basement. But I need that space there, and I need it to be soundproofed. I need the walls, and I had to run electricity to put like power and all this other stuff. But whatever. So over the course of this weekend or next weekend, I'll have a studio set up. You'll see this room change, and I'll be moving over there so that I can live stream it with you guys. Another thing is that I was supposed to take a vacation for some sailing, and I had to cancel that because of where I'm at with this house. I am committed to getting this done, or my wife has me committed to getting this done because I can't let her down. So right now, that's what the plan is. Okay. Now we're gonna talk. So all that shit's aside for right now. Let's get into the meat and potatoes of this. Okay, and what we're gonna talk about here. Now I want to talk to you guys about something. We're gonna go right back to this chart right here, and I want to talk to you first about. I want to talk to you specifically about. We're gonna get rid of this for right now. Matter of fact, we'll just clear this whole entire fucking thing. Oh, you know what we'll go to SPX. We'll look at SPX. SPX is pretty good. SPX goes back a long time.
President Putin saying that
we're going to look at SPX.
Russian central bank key
this is a good one to look at.
Macro indicators.
We'll go to all. Well, that's probably not a good one to look at, right? That's a pretty good one to be looking at. We'll look at SPX. It's an important one to look at, and I'm going to talk to you about this because on the macro side of things. You generally understand that the market is weak right now. It's neutral. Let's call it neutral at best, maybe slightly down, right? And it's interesting. You can look at an interesting one to look at would be. Let me see if I can go 1 year. This is actually pretty neat. Let's just say, look at how horrible this is, right? This is 2020. And you've got this progression of lower lows, right? 1, 2, and 3. This is pretty nasty, right? Going back to 2018. It's pretty nasty drop off in the market. And we'll look back at 1994 and some other times too. But I want to show you, but the point I'm trying to make to you is this, is that if we're going to trade down or sideways, let's say we do that. Let's say at a base level, we're going to do that for the first 3 quarters of the year. And let's say it kind of looks like this. This isn't good, right? This is bearish, right? Let's say we don't even get higher than I can show you some other time in history. We don't get any higher than right here. We don't even get this climb up. Let's say this is 1 year right here. And every time we get close to making all-time highs, we sell it off. And we keep selling it off. There's a couple of things I want to talk to you about. And first of all is that if there's a general idea that the market's going to continue to sell down to lower lows, that you can look for these lower lows now for the rest of this year, right? To buy a low, trade it higher, and then once we're oversold, to take your money and run. Now, how would you know if, let's say you're like, hey, Cap, well, I don't know. Let's say you're like, hey, Cap, let's say you're buying these lows, right? You trade them up. You buy the lows, you trade them up. Just pretend we sold this down, right? We trade it up again. We sell it down to something nasty, right? And the reality is that you just take your profit, right? Take your profit in that regime, right? And let's say we sell down here, right? And the oversold indicator pops up. The price doesn't actually matter. You'll see an oversold indicator here, and you'll see it actually down here as well. And then we'll start trading higher, and you'll get an indication that we're going to trade higher from here. Is my point. You don't need this part of the trade, but to capture this part of the trade is worth it. To capture this part of the trade right here is worth it, and this part of the trade right here is worth it. But this up here isn't. If you're a bull, right, you don't need all this. You just need to be able to. You just need to be buying this this year, right, and selling. And if we are going to trade higher, we'll have indicators that show us that we're going to trade higher here. We're going to get confirmation. This area here, though, you don't need this money. You just don't need it. And what I want to explain about this right here too, I'm going to show you some overlays, some comparisons here. And this is the trap that Jim Cramer was talking about. Jim Cramer was telling you to go buy value, go buy fucking oil, go buy, which is odd too, because we're different. The other thing about oil is, I'll overlay oil and show you when oil is done better than the stock market, because we're coming into that confluence right now in oil, where the S&P 500 could roll over and oil could continue to go higher here, believe it or not. You could see, or in past years, we've had that. The one problem that we have right now with oil is that, so in the past, right, we've had moments like this where the S&P sells off and then oil continues higher. Now, the one problem with this, right, is fucking the real GDP, right? The expectations and the forward guidance on GDP is that it's going down. And in previous decades, when oil has done better than the S&P 500, real GDP actually went above. It kept going higher. And it's not projected to do that right now. So there's a difference there, too. So I'm not sold on buying oil right now, to believe it or not, unless something changes in GDP. I'm not seeing that oil trade. And when Jim Cramer's telling you to buy value stocks and go buy fucking Home Depot and go buy all this other stuff, it's a trap. And I'm going to explain to you why I'm going to show you why it's a trap right now. And what I'm going to show you is NDX. I'm going to show you small caps, right? I'll show you RTY or the RUT, and with some value. What are some of the value ETFs, right? Value ETFs. We'll look at Vanguard. I forget what it's called, VTU or something. Value ETFs.
Redbook retail sales first week of April, 13.4% versus a year ago.
Yeah, we got VTV. We'll look at VTV. That's a good one to compare. Right. We'll look at USO, right? That's an ETF, right? United States Oil Fund. We'll throw some of these on here. It's SPX, right? And I'm going to show you NDX, or I want to show you NDX over. I want to show you what you can see here over the course of. I want to show you something here, okay? So this is what's important, okay? This is 2018. We can take it back as far as you want. We can go as far as you want back here, okay? And the key that I want to show you is this, is you look at VTV back here. I don't know if that one was correct. I think I might have got the wrong one there. Yeah, it's VTV. So the key that I'm trying to say to you is this, is that, you know, I saw a headline news that said, NASDAQ lost $1 trillion again. And so what you are going to experience in sell-offs, right? Let's say we have a bearish year. You're going to see large drops in tech, massive drops in tech, right? But you're also going to see small cap sell-off. You're going to see value stocks sell-off. You're gonna see this happen. You're going to see the entire market, the entire equity market, generally follows the same trend. But there's a difference that I want you to understand, okay? And this is the value trap. Is let's say you buy I don't fucking know, and you can say, yeah, well, Home Depot's gone up, 30 times over the past whatever years. But generally speaking, when you're trying to get into, hey, I'm just going to go buy value stocks, I'm just going to go buy small caps or mid caps, or I'm going to buy real profit driven ETFs. They really don't. Over time, they don't actually pay steep profits like NASDAQ does. They don't actually go as high as NASDAQ, and in turn, they have larger, steeper sell-offs. So my point to you is this: is that sometimes you can see this in stark contrast as we come further in time, right? And my point to you, though, is this: is that let's say we have a big sell-off, we sell down to 400, right? Value is going to still sell down, and your fucking Home Depots are going to still sell down, and your Clorox bleach and your Coca-Cola, it doesn't matter, they're going to sell down. The indexes that they're under are going to sell down. And you might only lose $2 on Coke, but you might lose, $100, $200, $300, $400 on Tesla. But you already understand that where we are, the regime. You already understand that we're going to have some bottoms in the market this year. So your best bet, rather than saying, well, I'm going to load up on fucking Coca-Cola right now, because the market's going to go down anyways, you're going to lose $2, and it's only going to go up another $2, right? Whereas if you are holding cash, right, taking profit, and you're actually buying the fucking dips in tech, you're actually gonna when you finally actually get a bottom in tech, that final bottom in tech, right, when we're finally oversold and we finally liquidated the market for the last time, you're still going to be in a position where you're beating inflation. If you stay within those value stocks, that shit goes sideways. That shit goes sideways, 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 and never actually beats inflation. In these times of stagflation in here, in the market, you'll wind up being just as bad. You won't be as bad as if you just stayed in tech. But this leads into the conversation we've had many fucking times where I say to you, if you are an investor in this market, that the easy street is over. It was over at the least it was over in at the end of 2021, and that means you have to manage your money, and you have to manage it for the next year to 3 years. And I'll explain to you when you can. I'm going to show you here when you can tell when you don't have to actively manage your money. But right now you do. There's no place for you to hide in the equities market currently where the market's going to, or that I can see, that you can put your money into, let's say Coca-Cola. Let's say right now you buy Coca-fucking-Cola. You'll just be stagnant for the next year. Your money won't beat inflation. You're not going to make any money, right? And if you left it in tech, yeah, you'd be fucked. But you already know that there are going to be bottoms that you can buy in tech. So you have to actively buy tech, right? And then you have to actively take profit. And you just keep doing that. And my point behind this is that because if you get stuck in value, right, you're going to be left with maybe breaking even after a year or 2 or 3. That doesn't make any sense to me as a trader. And furthermore, you can see that we're rolling over here,
in the
right?
second half
You
of
can see that when we
2022
resume
aims to bring
again,
inflation to the
let's say
middle of the
we
target range.
resume the upward movement in the market, right? Let's say it's here. Let's just pretend it's here. Let's just pretend, right? Let's say we sell down. Let's say everything gets awful, right? How do I do this? Let me see. Let's say we get all doom and gloomy, right? And we just keep selling down for the rest of the year. The moment that we resume this trade back up, right? There'll be a point in the market. When you can resume this trade higher with safety, right? There'll be a point we make an all-time new high that you can get back into that trade. You take your profit here at each time we approach another top, right? And then you jump back in. Now, every one of these bottoms down here that you actively manage buying tech, right, you're going to have bigger and better gains than having just sat for 2 years or 3 years in the value trade. I promise you that. And the only other thing I can think of that could be better might be the trade in oil. But we have a difference in oil right now. And the problem with oil is that real GDP is not projected to go up right now. So until that happens, and as a matter of fact, when Q1 GDP came out, right, the projections, oil started to sell down as well. And that's because of real GDP. If you go back in history, you'll see that it follows it. You'll also go back in history and see that even we've gone into cycles where the S&P sells off and oil actually goes up, GDP continues to go up. And that's not, we're in a different regime here than we have been in the past. So my only take on this is to go straight back to what I talked to you about when I launched the At Captain's Trades. And that was to, let me close this up. Was to just put your indicator on, right? You get your market breadth indicator out there. This has worked for me for years, right? Nope, wait a minute. I'm spelling it like bread. You put your market breadth indicator in the S&P 500, right? You don't have to not buy tech. You don't have to buy S&P 500. Make sure I'm on a 1 year chart here. I'll bring this back over here. And I'll get rid of all this other nonsense I put on here. But it doesn't matter when you go back in time. You'll know when we're oversold that you can buy one of these bottoms. And you can use this market breadth indicator on the S&P 500, but apply it to NASDAQ. If you like Tesla, if you like Apple, if you like Facebook, you guys already know if it's in an accumulation phase or a distribution phase, right? Or a corrective phase. How do you identify those phases, right? You already know by watching companies like Snap that they don't participate in market rallies, right? Unless we're super oversold, they might slightly, but they don't participate. If you see Tesla not participating in a recovery off of market bottom, right, an oversold bottom, then you know it's an easy way to tell that, hey, Tesla's in a corrective phase. If you see Tesla participating in market bottoms, right, then you know that it's not in a corrective phase, right? So you can identify individual tickers. If you're like, hey, Cap, I want to buy Tesla, right? You can easily see. But in the regime that we're in right now, if you want to save your money, save your cash, right? Even if we trade down here, there are going to be moments where you can even compare these moments. Go back and look at Tesla on December 1st. Go back and look at Tesla on January 26th. Go back and look at Tesla on February 23rd. Go back and look at Tesla on March 15th, right? Go back here and look at Tesla on April 6th and see if it's participating. Then you know it's not correcting right now. Do you guys understand that? Because you'll see certain tickers when we have these huge moves, they don't participate. You'll also see tickers when there's an accumulation going on, they don't participate in sell-offs either. Banks won't sell down the stocks that they're trying to accumulate and push higher, even if the market sells off. So just for individual tickers, if you're like, hey, Cap, I still want to buy Tesla, if you just check when we have a market sell-off and we start to go back up, is it participating? If it is, you can accumulate Tesla. That's like a general rule. If at that moment you see that it's not participating, or your favorite ticker out there, then you switch back to the indexes. You wait for the S&P 500 to sell off. You don't buy your favorite ticker, and you just buy the S&P 500. And then you sell the S&P 500 because you know right now that this year we're going to have some marked bottoms. You know that even if we break higher on the S&P 500, right? You know we're going to have some tops up here. You know you can see it in this breadth indicator, and you also know that you don't need all of it. You're only going to need to catch that bottom, wherever that bottom is. Doesn't matter if that bottom keeps going down, and you also know that there are places to sell those tops, right? You take your money and run, and this area right here, you don't need this, because if we're going to turn bullish on the market and go ballistic, right? Or we're going to go to like 6,000 or something. This is going to be like a speck of dust for you out there. It's going to be a speck of dust on your roadmap. This would have beaten inflation here, right? This would have beaten inflation here. And this next one, doesn't matter where it bottoms out, right? Every time you do this, you buy these bottoms and you sell them until everybody knows that the market is going to go higher, which is what? New all-time highs, right? Right? Until that happens, you can just keep doing this from now until end of year. You can beat inflation this way. If you don't participate like this, right, you will get stuck in those value stocks, right? And those value stocks, they're going to participate, but your Coke's only going up $2, whereas the S&P is going up 30, 40, where Tesla's going to go up 200 or 300. Does that make sense? So whenever we have these rips in the market or these rips in Tesla, you want to be in Tesla. You don't want to be in fucking Coke on a good day. You don't want to be in fucking Coke going sideways with that kind of nonsense. You want to be in tech. So keep that in mind, okay? You might say to me, hey, Cap, what about 2007 when it rolled over?
Situation in Bucha fake.
Let me clear this here. Let me close that up here. And what about Cap when let's get rid of this over here. Well, actually, let's bring this back up here. You're like, oh, Cap, what about in 2007, Cap? It was awful. Look at that. Look at that beautiful steep sell-off down here. Boom. Beautiful buy, right? This is February 2018. Hey, Cap, this is the SPX. Yeah, I think we can go back to 2007 here, because otherwise I think I have to go to the New York Composite Index. I think we can go back to 2007 with that hellacious sell-off, right? I mean, look at that nasty sell-off we had, right? This is like 2007, right? We're back in 2007, right? And you see it still worked here, right? You can see it down here, right? We traded higher here, went back down again over here. We were able to buy it again. We literally, you hear people say, oh, 2007, everything was horrible, right? That's what they're telling you. Everything was horrible. But in reality, there were relief rallies mixed in. There's one right there, right? Do you see that relief rally? Let me get this nonsense over here, right? You had another one up here, right? We sold it down. We sold it up. We're not going to be buying twice in here. We buy once, right? We buy some call spreads down in here. That you're like 30 points, right? 30 points, right? This is 1197 over here, right? This is 1302. It's like 200 points or something. 170 points. You don't need that whole trade. You just need that one trade. You wait until it sells off again. So this is 2007. This is as shitty as it can get. This is as fucking as shitbox awful as everything can get. And even look at this here. You can even see down here, right? You would have timed this perfectly down here. So, and you would have won this here, and you would have won this here. So my point two is this: no matter what the fuck's coming down the pike in the next year, no matter how bad it's going to get, you already know that you can have a mission planned until we resume higher, right? You can actually see that, right? This distribution down, we start to make all our new highs. You only need to win so many of these. You can actually see them, right? You take that win, you take that win, you take that win, and then boom, we know at some point that we don't have to manage our money for the next rip higher. So my point to you is keep your chins up out there. My point to you is that we know that we will be trading neutral or down in the year, right? At least it's to some point. It doesn't fucking matter. It doesn't fucking matter if we sell this it doesn't matter if this fucking market fucking burns to the depths of fucking hell. There are going to be oversold moments in it that you can buy and that you can, even if you just place that one trade, right? You just place that one trade every 1 to 3 months. You go balls deep into it. You go balls deep in. You're not going to get them all. Tesla went up I think last week, Tesla went up 200 points or some kind of nonsense. I would have missed that trade. But it doesn't matter if you miss that trade. What matters is that you're staying alive in the market that we have in front of us, that you are beating inflation in the market that's in front of us, and that once the regime changes to a bull market again, that you are still alive in this market. You're above inflation. You've beaten everybody else out there. You've beaten bullshit value stocks, and you're properly positioned with a ton of fucking cash so that you're not stuck fucking off with value stocks for fucking past 2 years or 6 months or 3 years or whatever the fuck it is. 9 months, it doesn't fucking matter, right? Jerking off with Coca-Cola or Costco. No offense to any of those companies. Those fucking boomer stocks they're trying to unload on you. It's because they need to sell their fucking bags to somebody, and they're going to sell them to you, and you're going to get trapped in it for this next year or two. So keep buying fucking tech is my point. It doesn't matter if this fucking market sells off to the depths of hell. There will be moments for you to buy all the way down to the depths of hell and ride it all the way back up out of the depths of hell. There isn't a time in history that I've gone back to where you can't time this to a certain extent, at least to a certain point. Now, are we there right now? We're not there right now, right? We already know that we're not there. We're not a buy. We need to be down here. So your next buy we're looking for at the next capitulation moment in the market. How long do you have to trade this regime? I don't know. 3 months, 6 months, at least until we're above fucking 480 right now, right? At least until that point. So for right now, if you're looking for how do I invest in this market cap, no, you don't just fucking keep adding your paycheck every week. You hold cash. And every month, 3 months, you're going to go fucking balls deep on a bottom. And you're going to buy a fucking bottom, and you're going to run it up, and you're going to make 100%, 200%, 300% in one trade. And then you're going to double, triple, quadruple your money. And then you can go and piss off with me and day trade. Piss away some of your gains with me, day trading 0 dates here on fucking live stream every day. But for the regime that we're in right now, my point to you is don't get stuck in the value trap. Don't get fucking stuck in the oil. But dude, right now, do not get stuck in the oil trap. Oil can keep going up, but I promise you right now, right? Go back and look at fucking real GDP. It fucking tracks it to a fucking T. And real GDP is expected to go down. So unlike previous examples in the past, our GDP kept going up, and right now it's not. And you can see that in oil right now. Now, can oil go up? Sure. Oil can go up some extra exogenous impacts can send it up. We get into a bigger fucking extended war, let's say with Russia, or fucking China acts up with Taiwan. Sure, no fucking problem. It can go up with that. It can bounce up outside of its bounds. But for me, if I'm looking for a guaranteed fucking thing, right? It ain't fucking oil. I can't guarantee it's oil. I can guarantee that if the market fucking capitulates once every 1 to 3 months, that I can buy the fuck out of that bottom. And I've been able to buy the fuck out of that bottom going back to fucking the 1930s, right? And make my money and stay ahead of the game. That's what they do. This is what the banks do. The banks have to buy these markets at some point. So I want you to be aware of that as we trade forward in the market. I gave you what I thought was going to happen today. We'll look at this one more time. We'll get rid of this right here. I'm going to dump this right here. Got a little bounce off R2 above here. Right, we trade all the way up to 445.33. If you guys are looking to see what I think is going to happen today, look at that. Look at that beautiful bounce up there. This is the same one that I was showing you guys on Twitter for the past 5 days, right? Oh, yeah, baby. Look at that, huh? But I showed you guys that chart last week, right? Look at that sexy little chart over there. And look at that. Bam! Bang, bang, bang. So what do I think is going to happen here? I think the shorts are going to shit their pants. I think we're going to trade higher. I think we're going to retest 445.33 at least in cash market. I think if you're lucky, we'll catch a bounce. This is our 2's at 442, and we'll check this out on Bookmap and see if we actually get some nice support down here. We'll look at Bookmap here. It's 914, right? We'll bring up Bookmap and we'll see if there's an actual support here now at 442.
The Scottish
if we can squeeze this higher and through. Now, if we squeeze this, able to squeeze higher than 445, we are going to wind up.
Says Sturgeon.
Let me see if I can go back to that 5-minute chart. It's not showing up here.
Reports from the BBC that Johnson and his finance minister
yeah, I like
would
that.
be
We
fined
could actually retest 450. I want to say if not today, tomorrow 450 could be on board. So maybe something like, let me see here, something like this, and then something like that, and you might get, this might actually trade down here. So your first short should be like somewhere up in here, maybe. Don't hold me to this. But I would definitely don't hold that shit down here because I think it's going to squeeze back up higher, and I think your second short is probably up here at 450. I could be wrong on this, but look back in December, and this is this kind of regime kind of
Johnson and
itself out.
Sunak resign.
So it's I think it's going to be something like this. I don't know if we sell down, then we do this, and then do this. We'll check that out on the open, but I think shorts are going to get fucked at the bell. I think puts are going to get closed at the bell as well, and bears are going to look for a better positioning. Right? We talked about this on Twitter yesterday. I think the bears want to be positioned here and here. I wouldn't want to be a bear right on the bell going, yeah, fuck you, we're selling this down, because CPI wasn't fucking 14%. So there's nothing you can fucking do if you're a bear. You're shit out of luck. So your first short is here and your second short is here. And maybe your third short is above that range, above that channel. Now, if a bull's going to tell you that we're going to trade higher and blast off to all-time highs, I fucking doubt it. Every month we trade down like this, okay, coming into an OPEX. And we also have the JPM collar down here. Hopefully my boy Damon can get his collar closed. If he closes this, you guys know about the JPM collar, right? JPM collar, this motherfucker, this asshole, what he did up here is this. Show you what he did. So up here, my boy Jamie Dimon, right? He sold calls up here. Okay? That's what he did. He sold calls. That's what he did. And he took the money, right? And from selling those calls, well, he knows, right? Because he's gonna impact the market. And he bought put spreads. That's what he did. This is what I'm teaching you guys how to do at Captain's Trades. He bought put spreads. And those put spreads are down here. They're in the money, right down here. So if he can get down here at some point, right, with his trade, right, what he'll do is he'll close those put spreads, and guess what they end up doing? They fucking buy calls. I shit you not. They literally buy call spreads, right? And the market moves where they want it to. So we'll trade down here and trade back up higher. So that's my take on where we're at. That's what I think's going to happen. I don't know that it happens right now. We're going to have a bloodbath. I think we trade up here. I think we might even trade up here, and then we come back down into OPEX. I think we have capitulation at some point. It could be now. It could be next week. It could be the week after OPEX. Could be Monday. But I think we still trade down. Is this bottom, if you want to know? I don't know. It's good enough for me, but the only thing that it's not lining up to is the capitulation. It's not hitting what I want it to hit to go balls deep into a trade with no worries. So I am not sold on this being where I want to go long this market. So there we go. We got the market about to open here. You can see we've got some resistance without even being open here at 446. So keep that in mind. Keep in mind over here. We'll see if that changes. We'll be looking for 446 for some sellers. It's right up in this area here, right up in this zone right here. Some sellers hiding up here. They're pissed off up here. It's 446. They're pissed off right up in here. Yeah, selling calls, right? So they own the S&P 500. They own SPX. They own the underlying security. And what they do is they sell you calls on it. So they sell you, right? They sell bulls calls, right? Which is a bearish position, selling calls on the underlying security. Good question.
Just
Look
noticing
at Chase. Chase like we're shorting right now.
In the New York press that in the
what am I
last
missing out
half
here?
hour,
So I'm looking at what you guys are doing now.
investigating
Sorry, we've got
possible
10 minutes
explosion in
left. I'm going to go through the
Brooklyn
chat and read what you
subway
guys are saying now. I wasn't reading,
with
and I'm sorry for the
multiple
messy discussion this morning about macro. I
Also
wanted it to be
report of the
cleaner,
shooting, so it's unclear
but it wasn't quite
the
cleaner.
full nature of the incident.
Maybe we'll see some call premium kick in this morning as well. We'll see if we get some premium kick in and some calls at the bell this morning. Let me know in the chat what do you think is going to happen off the bell, because I think we're going higher. So the bulls didn't buy the calls. The bulls did buy. The bulls did buy calls. I've got the good question, Josh, because the hero indicator showed that calls are bought at the bell, only at the bell. I'll bring you back the spot gamma thing from this morning. They didn't buy calls all day long. They bought them at the bell, though. Look, Cap, don't bother to read all DGen talking about selling coke to beat inflation. How y'all doing? Hey, Dan, how are you doing? Francis saying we sell off. Still adding the other handle, Captain. Yes, sir. So the other handle, you'll get my trades. I'm only going to post trades when I take them on that handle. You won't get any other notifications on that handle except for when I go to make a trade, and I'll live stream that trade. 9:21 right now. 9 minutes left. Yeah, I was just trying to figure out. Oh, wait a minute. I got the top chat on again, not live chat. Boom, back to live chat. Yeah, good to see you too, Dan. Thanks for showing up this morning. I appreciate it. Just double. Yeah, Sport K, good to see you too. Just double the CPI to get real inflation has been true for the better half of the year. LO. Yep, fuck yeah. I'm in it right now. I am seeing real inflation that's out of fucking control right now. They didn't tell us it was 14%. Yeah, I think you'll get a retest at least of 445. I think you'll at least see that retest. Hey, your wife's boyfriend, good to see you this morning, brother. Market breadth value is in. Yep, there is. It's called market breadth indicator. Yeah, it's fucked up. My microphone, the expander, and so I loaded my microphone today, and it didn't load up my expander and my compressor. So I can cut. If I cut this off, I can reload it back up, and it'll be a better broadcast. So I promise that tomorrow's will be better. So yeah, I see at least another retest here. 444.86. I don't care how far we trade down. I would see at least another retest here at 445, and possibly 450. 450 might be tomorrow, but I would think that. And you know where S1 and S2 are. You got your support levels, right? You got S1 here at 439.87. And remember this too, okay? I want you guys to see this. You see S1 and R1 here, right? This area here is for a squeeze, right? This zone, see how tight this is, S1 and R1? And the reason being is because if it was really shitty, we would have sold down heavy and hard. And we should expect the same to take place with it, for all extensive purposes, a nothing burger. The only other thing I think we'd have to watch out for today would be the Biden speech. I think that's that'll be at 2:30 or something. So we have 6 minutes until market open. These change too, just to give you guys a heads up. So these do change as market opens. You'll see the levels change. As still low liquidity environment. 5 minutes left until the bell. It's a piece of glass. Higher because better than expected CPI. No shit, your RTX 380 kept overheating with the side on. Good to be back, GP. Good to see you, brother. So are you buying calls up to 446 then open then? Or are you going to watch? Good question, Winky. It's a good question. So I'm in calls. I bought some shit tickets yesterday at the Bell. I bought some shit tickets down here. My thing to you today would be that if we take profit at any point today, I would be definitely buying a dip here. If we trade here, I'll buy this dip right away. I'll add more. Right here, I'll buy this dip. Right off the bell, I'd buy this dip. If we trade higher, though, and reject, I'd be looking to buy the dip here. So let me clear that off. So off the bell, if we trade down, I'm going to look to buy that dip. If off the bell we trade higher, I'm going to look to sell and look to buy a dip lower right here. I'm going to look to buy that dip. Good question. Another thing we can do real quick is we'll get rid of this. Now, and the reason being is because I think as a bear, let's be honest. If you're a bear for that report this morning, your best positioning is without a doubt here and here for the next short. Without a doubt. It's not unarguable at this point. And on a larger time frame, it's not unreasonable for us to trade up here before we meet some resistance. Not off the table to trade to 450 with that report. But let's look at some other stuff, okay? Before we open here, we got 3 minutes left. Get your little charts out that you got out there, and just snap yourself a small line here, and you can just see S1 right there. So go back to a 1 day, and you can see that. I don't know why that line's not fucking showing up. Hold on here for a second. Get that. I don't know why that's all fucked up. But we'll snap a little line here. It's a nice little point down there. And we'll see if we trade down. And I'd be looking to buy this S1. If we sold right down, I'd be looking to buy this without a doubt. Hands down, I'd be looking to buy that. If we gap up or start trading straight higher, I'll look to take some profit. And I will bring up here we go. Hold on here for a second. We got the bell coming up here in 2 minutes. A minute 15, excuse me. And these levels will change. We'll take a quick look at the levels. We'll see if the buyers step in or not, and where we trade from here. Yeah, I'll show QQQs. As soon as we open, I will. You're shorting. Hey, Matt, good morning. No Fed speaker tours today. They must be tired and rested. No, I think we had some speakers today. I thought we had speakers today. Let me look. Kind of sucks because I can't hear Trade the News. I might end up speaking over it today. I have to figure out why I can't hear Trade the News. Let's see if I can add an audio source to the mixer. Display capture.